Good. Good day to one and all. This is Dr. Sivaraman of astro-physical.com. I'm going to give the review of the live market analysis and the forecast, what I have given it for this week, 30th May to 3rd of June. Today we are on 3rd of June between 5 and 5:30 GMT. I'll try to review the session-wise forecast, what I have given it on Monday, 30th of May. And today we are Friday. We are going to review the forecast first of all. Besides, I also give the range in which the four images and the commodity pairs swing during this particular week. The range is mathematically derived. The forecast is derived based on a sequential algorithm, and I will review how far the market has moved in line with it of the forecast or against. Then afterwards, I'll briefly touch upon the market reading, how market reading and the trading should go hand in hand in order to consistently earn money from the market and also limit the risk and maximize the profit. Now, if you've got any doubt and you want to contact me, my contact details are given here. dr@i-noindices.com is my email ID. And the Skype chat ID is iknowiindices@hotmail.com. Through chat also you can contact, I'll accept. And if you want to see more about my forecast pattern, then you can just visit iknowiindices.com and try to find out how exactly the forecast is being given. So I'm there in the market since 1999, and if you've got any doubt, you're welcome to ask questions. Let me go to that of the components, namely the derived forecast. The market reading will be pertinent to that of the forecast and fine-tuning of the forecast. Then trading strategy is in the event the market goes against our expectations. What are the steps we take so that we don't do crisis management? Instead, we have contingency plan all the time. So I give the forecast that market is expected to form up and then start making the swing and the slide and also rise, etc. But much of rise was not seen in both Euro and GBP, but they have done nominal rise in the case of the denominator currencies. Again, in the case of yen, they just gained and dropped it again because they are handling the crosses mainly. And there could be one reason for this sort of consolidation for a prolonged period, that there might be low volume from that of traders' participation. So if the traders' participation is of a lesser volume, then the players have to make more and more swings around the range, and thereby they'll be able to accumulate more positions before making a decisive rise. And also, they are trying to create the market sentiment and act against it of the traders. But the traders are also become very alert, and they are trying to avoid getting trapped too easily. Besides, if they find more volume in the case of crosses, if the traders are taking more positions in the case of crosses, because the prime events like the ECB press conference and also non-farm payroll could affect US dollar sentiment. So in the event, if they take the positions in the crosses, then probably they might be unaffected. That could be the assumptions. So the traders might go in for more volume with regard to the crosses, because it becomes evidential here when you look into the net exchange on a daily basis. They are making contrarian moves. That is, they make a rise in the case of Euro and drop in the case of GBP. Then subsequently rise in the case of GBP and drop in the case of Euro. And along with that of GBP, they gained the levels in the case of USD. And now you find along with that of GBP, they had dropped USD and. So these are all contrarian moves. Besides, they also done the drop in the case of USD, Euro, as well as drop in the case of USD CHF as a contrarian move. Yesterday also during that of the webinar, I explained that they have been making the USD weakening move in the case of the majors, but in the case of the commodity pairs, they were doing the USD gaining move. And again, you come across now that they are making the USD weakening move in the case of the crosses, but they are showing mixed move in the case of the majors. So when they are handling the crosses, it shows that the traders volume in the main market or traders taking positions in Euro, GBP, USD and USD CHF, all those currencies, is lesser when compared to that of the traders taking position in crosses. So that is why by moving the majors, by making contrarian move, say for example, drop in the case of USDN and drop in the case of GBP, they are able to push down GBPN drastically. That way, they are able to punish or trap the traders who have taken the long positions in the case of GBPN. And then subsequently, once they liquidate, then they start gaining the levels. So this sort of moves, they are doing it in the market. So today, it is Friday, 3rd of June. You come across the non-farm payroll to be released around 12:30 GMT. I'll be giving another webinar by 11 GMT, and that will be pertaining to the how exactly we can trade the non-farm payroll. Please come for that particular webinar. Then I will give you the spike trade calls, and also I will review by 14 GMT during the US session how exactly the trades have gone through. Now they are expected to make the swing and rise during the European and firm up during the US session. So whenever you come across the swing, it will be either way moves. So initially they will make either way moves, and they are expected to make a rise after that of the non-farm payroll release by 12:30 GMT. Then subsequently they are expected to make again swing from that of 13:30 GMT up to 14:30, and then start firming up from that of the late US session. So this is how the early and the late session moves are going to be today. And next week onwards, 6th to 10th June, they are expected to make the trending move, because only during that of the first week and the last week, or a week like this week, wherein the month gets over and the new month starts, they make the monthly trend reversal move. But once the entire week consists of the month, which is second month, third month, first week, second week, third week, etc., then they make the trending move. This time they are expected to make an upward trending move in the market, and they are expected to make the upward trending move till September. So kindly watch and see how exactly they are suddenly making upward moves in the market after making the middle level consolidation with the either way stop-ins for some prolonged time. Now these are all the levels in which the currencies were swinging. I forgot to update it. Okay, in the case of euro, from 1.1098, they went up to 1.1220 and come down to 1.1142 as the low. Then they are consolidating after 50 pips drop, about 30 pips rise and 50 pips drop. In the case of euro, they have done it for the ECB press conference, and they give that impression that it is dovish, and that will be short-lived, and they already started showing positive net change in the case of euro, and they are expected to. Yesterday they have shown the negative net change in the case of Australian dollar also, and now they are showing positive net change. So slowly they are expected to gain the level, and for the non-farm payroll, they are expected to make further rise in the market. And in the case of GBP, from 1.47 they dropped to 1.4388 and consolidating around 1.44 area. In the case of euro, they did not make much of a gain, and they have been doing all along the consolidation, and they are expected to gain the levels today and breach the high what they are set this week. And similarly, in the case of GBP, they are expected to gain, but may not gain up to that of the high. They might gain to that of the middle level to 1.45 to 1.4630 area. Then in the case of yen, they just made the drop to 108.50 now. And so from 111, they did not gain. They went up to 111.45 and started dropping it in order to handle the GBP yen cross and the Euro yen cross. And they are expected to gain back again the level to 110. And in the case of CHF, 98.25 was the estimated low. They have come up to 98.62, and the high only below that of the parity. A narrow range consolidation, not even 100 pips throughout the week. Then in the case of, say, Canadian dollar also, they did not make much of a move on the either side. So within 100 pips swing, they have been doing it all along. It shows that traders' participation is less, so that is why they are making up and down more alternatively most of the time. And primarily they have done the contrarian moves in order to handle the commodity crosses. In the case of Australian dollar, again they have just done the consolidation. Probably people are waiting for the outcome of non-farm payroll and the fundamental news to be out, how exactly whether US dollar is going to behave during the rest of the month. Then later on, traders want to commit positions. Always keep in mind, it is something like trying to take the bath after the surf in the sea is settled. And it is going to be a never happening situation. But invariably, the traders, because of the bad experiences, they try to phase out or try to take some rest and come back to that of trading, because addictive trading is a condition wherein they will not be able to stop that. Even though consistently they have been losing money, they may not be able to stop, and they will try to come back to the market in order to earn back the lost money. That is how you find the traders continue to commit positions in the market. But my request for such people will be, try to read the intentions of the players. See, you have been following so many methods, but still, if you are not in a position to make money, that means it is something different. So when you see that suddenly before that of the data release, the market make wild moves, and why it makes such moves and who is responsible for such make. And if you ask any of your friends or relatives or any other fellow traders whether they have participated in the market or during such moves, they will simply say that we are watching the market. So who is making such up and down moves? Basically the banks, and the players are using the banks as their hand and try to make manipulations in the market. In such a scenario, we need to read their intentions and then try to trade, so that we will be able to really take the right way of trading. Besides, the market move is so wild and quick, so we cannot just like that keep stop and try to trade. And just like that, we cannot estimate where we can enter, where we can exit, and where we can hedge and things like that, because invariably the market volatility varies depending upon the volume. If the volume suddenly increases, the momentum might increase, and if the volume is low, the momentum will be low in the market. In such a condition, then the players will try to hit nearby stops, because hitting the stops, they earn money. They are here only to make money from that other market, not to show higher level or lower level in the case of Euro or GBP. For that, they are not paid, and they want to earn money from that other market. If anybody wants to earn money from that